Hey, welcome to the channel, guys. In today's video, we're going to talk about the current market, the current real estate market, and the opportunities that exist for investors. So don't forget to like, subscribe, and comment below. Here we go. So what is the current market right now? So as everybody is aware, interest rates have currently gone up again, and they're expecting it to go up one more time. The Federal Reserve is probably going to increase interest rate by another 50 basis points, which is basically 0.5%, which means that interest rate is probably going to climb to about 7% or 7.5% by summertime, if not more. So what does that mean? Where does the biggest opportunities exist? So right now, inventories are still low for residential for the most part, right? And so as long as inventories are low, the prices for residential real estate is not going to come down. I mean, for the most part, I think nationwide it's currently still stable, depending what part of the country, in which region you live in. I believe east of Texas, basically Florida and the Northeast, prices have actually gone up, versus on the West Coast from California all the way to Arizona, prices have actually gone down about 10%, as much as 10%, anywhere 5 to 10%. But again, it's going to depend on the inventory that's going to come into the market. And that's going to make a big difference whether prices are going to come down and there's going to be some relative crash on the residential side. So what that means is that the biggest opportunity, I believe, is going to come into the multifamily side, especially commercial multifamily, because commercial multifamily mortgage works differently, and I've made a video about the differences between a residential mortgage and a commercial mortgage on another video. Please go check that video out. It provides a lot of good information on the differences between residential and commercial. But basically, on the commercial side, there was a lot of investors that bought deals in the last 3 years during this, bull market. Crazy prices, the prices were going up significantly in the last 3 years, and there were a lot of investors that bought these deals with the expectation that interest rates were not going to go up as much as they did, but also rent was going to continue to increase, and in turn prices of the commercial real estate was going to go up, and most of these deals have a 2-year fixed rate, right? So let's go into detail why this opportunity exists on the commercial side versus the residential side. So on the commercial side, on the residential side, typically mortgages are 30-year fixed, right? You can get them as low as 15 years fixed, but typically, especially nowadays, since the Great Recession, most mortgages are fixed rates. They do offer what they call ARM rates, which is adjustable rates mortgages, but most of them are fixed rates. So for people who either purchased or refinanced their mortgage in the last 3 years, they probably got a fixed rate and they're locked in with 3% rates and lower for the foreseeable future. So those individuals are not going to sell their properties unless they lose the job and they are forced to sell. Most people are going to hold on to where they live, and they're not going to be moving, right? And that's the reason why the residential side is not going to be impacted as much as the commercial side. On the commercial side, on the other hand, most mortgages on the commercial side have a balloon payment or an adjustable rate that's going to kick in. And this adjustable rate can be anywhere from 2 to 5 years, right? So what does that mean? Let's say you bought a property in 2020, right? When all this, real estate was going, it was hot, and prices were going up, monthly by 10% or more, and you locked in a low rate of 4%, right? So what that means is that your NOI, net operating income, is based off of that rate being the 4% or 3% or 5% or whatever you locked in. And so you're cash flowing based off of that rate, based off of that interest rate. Now, what happens if the interest rate goes up? Well, every time the interest rate goes up, that eats up your cash flow, right? If you're cash flowing 100K on the property and interest rate goes up, by a point, it could impact you by as much as 10 grand or more on your cash flow, right? So what does that mean? That means that a lot of investors that bought their properties, commercial properties, in the last 3 years have a balloon payment or an adjustable rate that's going to kick in. So they're going to be hit with this rate hike, and they're going to be impacted the most, right? And they can't refinance to another low rate because the rates have gone up. So imagine someone who purchased it with a 3% rate, and now suddenly they have to refinance at a 6% rate. That's doubling their mortgage payments, right? And that's going to completely destroy their cash flow, which in turn is going to destroy their cap rate, and which in turn is going to reduce the value of that property. Now, this is where you come in as an investor. A lot of these investors will need to get out of these deals at a loss, right? And for those that have been on the sideline, or those that did the right thing and cashed out, last year and timed the market perfectly, you'll have an opportunity to clean up, right? So be on the lookout for multifamily deals, typically 5 units or more, that have, that are facing this situation specifically. And another thing too is rents are not going up. In fact, rents are going down in a lot of parts of this country, and depending where you're located, rents either have stayed flat or are going down this year, and they're probably going to continue to do so. So all of that affects the cash flow of that investor who owns that commercial property. So for an investor right now looking to purchase a multifamily, this is the best time. There's going to be a great opportunity coming after a long time to get into commercial real estate at a good price. For the past, 6, 7, even 10 years, the multifamily space has just been skyrocketing. The prices have been going up, and it has been very competitive. That's about to change. So ladies and gentlemen, investors that are finally wanting to get into multifamily, it's going to be your opportunity in the next 18 months. Be on the lookout. I'm going to do more videos covering this in great detail. Comment below if you want me to give you an example of what the deal is going to look like. And I can even probably show you guys some specific deals that are coming in the market to give you an example. All right, guys. With that being said, thank you for watching. Don't forget to like, subscribe, and comment. And again, like I said, if you want me to do more deep dive type of videos around this topic or any other topic, please comment below. Until next time, take care.